so much you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time.
Welcome to Is It Bad for the Economy, the podcast where we explore whether Trump's economic policies are helping, hurting, or just a load of hot air. My name's Kobe Tyree. I'm a Democratic strategist trying to figure out how the Democratic Party can finally get the credit it deserves for outperforming Republicans on the economy for basically the last 30 years. And joining me is the incredible, the anonymous financial practitioner, Banker Bill, who's doing some great work at a bank you've definitely heard of. Folks, our subscriptions are going up, our listens are going up, but we have to ask you, please leave us a review. We see how much the numbers are going up, but at the same time, we haven't gotten an Apple review since August. So for all of our new listeners, we'd really, really appreciate it if you gave us those 5 stars. It is the number one thing that you can do to help us get a wider audience. But I also want to thank everybody who's come in after listening to the 1-hour marathon with Wall Street Journal trade reporter Gavin Bade. We're so happy to have him join us. But as I mentioned in that episode, Banker Bill and Gavin were so eager to jump right into the trade minutia that we have a lot of headlines to catch up on. So Banker Bill, I just wanted to run you through them real quick. The first one, it's a little old news now, but it was an eye-popping number, $1 trillion pay package for Elon Musk. 2 questions. First, how is this justifiable? And secondly, should I care?
How is it justifiable? It's justifiable because the headline number doesn't mean a whole lot. Long story short, for him to actually get this pay package, the $1 trillion, that headline number, the thresholds and the achievements he needs to make would probably be worth $1 trillion. We're talking about the robots, X number of robots sold at Y price. So that's what I could say. Second, should you care? No, you shouldn't care. Are you a Tesla shareholder? Maybe you are in some index fund. And if you are, your custodian, whether that's Vanguard, BlackRock, Blackstone, whomever, may have voted yes or no on those shares for you. Ultimately, it did pass with an overwhelming percentage of the vote. But should you care? No, I don't think you should.
So it's incentive-based, not a big cap hit.
It's heavy on incentives. Yes, good way of putting it. And like I said, if he achieves all that, he might be worth it.
The federal government has minted the last penny. I don't really care for pennies. I'm slightly uncomfortable about the fact that our base unit for cash transactions is now 5 cents. Does this matter? And there's still going to be 1 cent digital transactions, right?
Yes, I don't think that will change. It's just that in cash transactions, they're going to round to the nearest nickel. Should you care about that? You should care insofar as it's an obvious example of the reduction in the purchasing power of the US dollar. But I would say this to you, okay? You hear a lot of people argue about inflation, how the dollar's lost 98% of its value over the last 100 years or whatever the hell it is. Dollars aren't for putting under your mattress. Dollars are means of transactions. You buy things with dollars or you invest the dollars. If you just take your pennies and stick them under the mattress, you deserve to lose the value of your money. Why? Because you're not doing anything with it. And if you're not taking that money and putting it into something else, well, shame on you. But nonetheless, like I said, it is a mark of devaluation of our currency, sure.
Besides increasing the cost of a couple of things by 5 cents, are we going to feel this?
No, I don't think so. Not particularly. I'm interested in what happens with the marketing scheme of what you can't sell something for $9.99 right, in cash anymore. For a long time, maybe you've seen it where you are in DC, but any of the cities I go to for years now, they've been offering cash discounts. So what happens to that, right? Because the credit card transactions fees, they range from anywhere, could be 1-2% to 5%. So, I'd be interested to see the marketing gimmicks and how those change, if at all. How are we going to bifurcate price, cash versus card price? Not sure. It's interesting. We'll see what happens with that.
Well, I think things are definitely going to go to being $9.95 instead of $9.99, but I think that 2% credit card fee is probably not going to be super effective. 50-year mortgages.
Dumb.
Okay, good. Anything more to say on it?
Yeah, so you're going to financialize the shit out of an asset we've already subsidized and financialized the shit out of, which in part is why it's so expensive to buy. Oh, and by the way, you're going to take a 50-year mortgage on a house. You know how fast you're going to build equity on that? Not as fast as you are on a 30-year mortgage, which isn't as fast as you would on a 15-year mortgage. You know why we have a 30-year mortgage? That goes back to, I think, FDR. And we have a 30-year mortgage because people couldn't afford it back then. I wouldn't support a 50-year mortgage. So I'll put it to you a different way. There's a lot of transactions costs to buying a house, right? You go buy a house, you pay commissions. If you take a loan out, you pay origination fees. You pay all sorts of different fees, inspections. Maybe you're waiving your inspection in some markets, as crazy as that is. But you pay a lot to get in the door and take on debt to own a house. Now you're going to do all that and also have to pay it off over 50 years. You're not actually buying anything. You're really just renting it. It seems more affordable on a payment basis, but you're likely going to have a higher interest rate. Obviously, everybody knows a 30-year mortgage rate is higher than a 15-year mortgage rate, right? Cost of debt is longer, costs you more because you're taking out a longer term liability or a longer term mortgage on the asset. And it may even cause home prices to go up in aggregate.
That was going to be my next question. I don't want a 50-year mortgage, but how is this going to affect the housing market?
I don't think it's going to actually happen. They're just finding trial balloons out there and they're beating around the bush. You remember several months ago, Trump was asked about whether or not he'd get involved in building houses. What did he say? He said, I don't want to get involved in the local politics or something, or that's like a local decision. But, he's happy to get involved and take your pick Latin American countries' elections. So I'll leave that for you to decide.
We got a bunch of new unemployment numbers. It seemed like more of the same. Things aren't going great, but they're not falling off a cliff either. Are we still trusting BLS numbers? Do we think that the post-shutdown jobs numbers are accurate?
I don't have any reason to distrust the numbers coming out of the BLS. I'll give the BLS the benefit of the doubt until they fall flat on their face. But I trust that the people working there are being dutiful and accurate. And if they weren't, I would expect there to be a leak. There's enough people there that I would expect the leak. The data is shared with a couple dozen people before release. If they started to centralize that data and only one or two people saw it, I think that would get leaked out. We read about it. But look, to your point, it's something that underpins the basis of our show, which is the American economy and the employment picture in particular came from a period of strength in the new year and has been weakening over the past year. And the U6, which we refer to, is holding steady at 8%. The high over the last 12 months was in August of this year, which was 8.1%. If we get up to 9%, I think that's nearing a recessionary condition. And I think that's what the Fed's concerned about. That's why I suppose they're going to cut rates this month by another quarter point or so. They see that unemployment number grinding higher.
So as we've discussed, that means the Fed is more worried about unemployment than they are about the inflation.
And they tell us as much, yes.
So are they more worried about unemployment or have they just given up on 2% inflation?
Ooh, I think they've given up on 2% in the immediate term.
So Donald J. Trump is the president who killed the 2% Fed inflation goal?
I think we can look at it in a very simplistic way. If inflation is, say, 3%, you should get paid what for loaning the government money? To be very simplistic, it should be anywhere from 0.5% to 1.5% higher. So if we take the midpoint, and I'm just saying that's an estimate that gets thrown around in finance and economics all the time, right? So if inflation is 3%, the federal funds rate should be 4%. That's where they are right now.
Why does that make it okay or acceptable that the entire financial system has just given up on holding itself accountable to the standards that it's held itself accountable to for over 50 years?
It's a good question, and it's because unemployment's rising. I think that's what you'd hear the Federal Reserve say. I mean, that's what you've heard them say in their speeches. The economy has weakened, they may say. The unemployment picture has weakened. Nonetheless, we are seeing improvements in inflation, but not to our target. They've been over target on the 2% for what, 60 months almost? 55 months, something like that? And for basically the whole decade of the 2010s, they were shoveling money into the system, buying mortgage-backed securities hand over fist, and everyone said that was going to create inflation, and they couldn't create any. You only started getting inflation when you started dropping money out of helicopters in COVID. So that's probably not the answer you're looking for, but the long and short of it is, over the last 55 months or so, we've been above 2%. That should tell you all you need to know about how they feel about the 2% target.
I felt for a very long time that our generation of capitalists, our generation of finance tycoons are one of the worst generations in American history. And this just feels like another slow descent into middling.
What if I told you to get to 2% inflation, the U6 had to go from 8 to 10? Would you do it?
I think the Fed is supposed to do everything it can to prevent us from having to make that kind of a choice. And they've clearly failed because they've been cut off at the knees.
Well, to an extent, it wasn't the Fed who signed all those stimulus bills in 2020 and 2021 and 2022. That was the president, Trump, and Joe Biden.
Right.
So did they raise rates too late? I 100% think so. And now are they cutting too late? President says yes. I don't think so. I think they're about at neutral right now. But they're telling us they're moderately restrictive. They're a little above neutral. I don't really agree. I think they're about at neutral.
Look, it spiked because what we did during the pandemic. We should have done what we did during the pandemic. Biden cleaned it up.
You say we should have. That's fair. If you want to
landing.
say that we should have done legislatively what we did, that's fine. I'm not going to argue it on that. If you're going to have that take, you also have to take that the Fed also should have raised rates sooner.
I think
that's a black mark on the Powell Fed.
And I think the reason they didn't is because of a combined political campaign from Wall Street, from the corporations, and from the Republicans to make it look like Biden was the least successful economic president of all time, not giving him any credit for the economic miracle that was the soft landing, thought to be impossible before Biden and Powell pulled it off. But because they don't have the authority to enact financial policy, because Wall Street, Silicon Valley thinks they know better than the Fed and thinks that restraint is a four-letter word, they're not allowed to make the decisions they need to make. And to me, it's an indication that Trump doesn't just own inflation because of the tariffs. Trump owns inflation because he has completely severed the political alliance between Wall Street, big business, and the Fed. And he has convinced them that if they team up together, they can use nationalist, socialist policies to extract more money from the market than they were ever going to make in a fair and competitive, well-regulated marketplace.
I think it's more simple in that they were late to raise rates because they were still looking through the rearview mirror, and that the prior 10-year period, they cut rates to zero and couldn't create any inflation, and they were saying it was transitory. That was all the word, it's transitory.
Well, if they had given Powell and Biden any credit for the soft
Who's
landing,
they in this case?
The entire financial world that's accepting this 3% inflation after they spent 50 years telling us it should be 2%. The people who are just giving up on doing their jobs, giving up on holding themselves to high standards, giving up on making this economy work for anybody but more than just the 20%. I didn't make this 2% number up. I'm holding them to their own standard and saying that it is frankly embarrassing that they are just giving this up.
You could say that, but I would tell you that the Tax Cuts and Jobs Act of 2017 gave them the room to abandon the 2% inflation because that cut corporate taxes.
Yeah. I think, I think Donald Trump owns this on every single level. He owns this on the 7-week level, the 6-month level, the 5-year level.
Oh, sure. I don't disagree. As soon as he came in, I think he owns it. Right. He could have spent his political capital doing anything and everything to address inflation, which the administration just denies. They say there's virtually no inflation. They're going out anytime they can. People who have been fired by this administration are going out and saying there is virtually no inflation. It's incredible. They're still out here shilling for an administration that's fired them, saying that there's virtually no inflation as people are living through this. So, yeah, I agree with you. He wears it. To me, look, I think all political parties wear it. I've made that point several times.
How can the Democrats wear this? They let the Fed cook. They cleaned it up.
Way too much money spent in 2021, 22. The Inflation Reduction Act did not reduce inflation.
It got down to 2.3. You can't argue with the number.
That's why I give the Fed credit.
But Biden got out of the Fed's way.
I agree with that.
In a rational world, in 1982, it would be ridiculous to give the president credit for what the Fed's doing. But if we don't give Biden any credit for the soft landing, Trump gets to take away the 2% Fed inflation target. You see what happens when you don't reward basic competence?
Sure.
You get 3% inflation in perpetuity after we got it down to 2.3%.
Yeah, it was going the right way. What changed in April? What made it start going back up on a year-over-year basis?
And I'm so happy that Trump has been completely exposed as a financial fraud who has not a serious economic policy bone in his entire body. But the fact that the Wall Street guys, the rest of these guys are still lining up behind them. They're socialists. They're socialists who are extracting
corporate socialism. Look at the profit margins.
They're not capitalists. We shouldn't listen to a single thing they say about the economy. They are lying through
Elon Musk, number one, that you brought up at the top. It's not everybody, but if you want to generalize, go ahead.
Who's calling for Trump's impeachment because 3% inflation?
The president shouldn't be impeached because inflation's too high. I don't think that should be the case for any president, including Jimmy Carter or Ronald Reagan.
It's 100% true for a president who's stacking the Fed with sycophants.
Only 1 second so far.
Well, yeah, because
but more to come.
For lack of trying. Secondly, he's threatening members of the governor's board with criminal action. And even if those court cases are getting thrown out of court because the DOJ is out of bodies. But if this means that you have to hire a lawyer on permanent retainer to go through all of your finances in case Trump comes after you, yes, absolutely.
I could see it
Influence
having
the
a chilling
Fed.
effect.
He owns this. He should be impeached for the things that he has done to attack the Fed. They would have impeached Biden for any of those attacks on the Fed.
That's a shame. I don't think he should have been either.
No,
that's the political
I'm
environment
sorry.
we're in.
Fed independence is paramount, and when we let people infringe on that by claiming political restraint, we lose 2%.
I agree with you. We've been through that. I've said that to you.
How is that not an impeachable offense? How are we ever going to hold people accountable if at the last second we
you,
always
you
say,
vote them
"Oh,
out. You get
that's
rid
too
of them.
far."
You vote them out. They got washed in November because of this.
Yeah, but they won,
and they're still denying
because
it.
you and all your boys were telling us that Trump was a serious economic policy. I had to convince you that percent wasn't serious. These guys need to be held accountable.
I got my face for that one.
If you were willing to work for the Trump administration, you were an unserious grifter. Hassett is seen right now as being the favorite for the Fed. A lot of people are assuming it's a foregone conclusion at this point. Is there any hope of getting this guy out? If this guy gets nominated, we have to impeach Trump for completely dicing up the Feds. Stop laughing. Why am I shouldn't be the one who's not laughing about the fact that we lost 2% inflation.
Right. I don't want to keep going over the 2% inflation thing. We've been over target on 2% inflation for 55 straight months.
Yeah, I'm furious.
That includes when Biden was president.
Yep.
Up and up and up to like 8%.
Yeah, it did. And then he cleaned up the mess.
It would have been clean. Wow. It would have been cleaned up sooner had the Fed raised rates earlier.
That's fine. You know, if you want to attack the president for...
No, I'm attacking the Fed on that.
If you want to attack the Fed and the president for being a little slow, for being a little fast, that's normal. Those are the conversations.
They were quick to spend the money.
Right. And those are the criticisms we're supposed to be having. But increasing inflation with your personal policies and actions by 0.7% in less than a year. Who would have thought that was possible 2 years ago? Hassett, foregone conclusion. This guy's a joke. We've talked about it. Are we going to see any pushback on him?
When we talked about this in, what was it, July or August, you were asking me the question about who the guys were. I think I said it was Waller, who's there now, Kevin Warsh, and Hassett.
Yep.
And if I remember correctly, I ranked them most experienced for the role to the least was Waller, Warsh, Hassett. And in terms of loyalty to Trump, it was probably Hassett far and above, then Waller, who was a Trump nominee, and maybe tied or a close third to Waller was Warsh. And I still think that way. I don't know exactly who's on the banking committee, but whomever he nominates will have to get through that committee. I don't know, Kobe. Look, they're probably going to give him the latitude he wants and let him appoint Hassett. I just don't know if Hassett will have the room. Even when this guy comes on and talks on the various financial networks or you hear him on the radio, he doesn't sound like a guy Trump would even pick. He doesn't sound forceful. He doesn't necessarily sound credible. He doesn't make his arguments particularly well. I think Mirren, even though I disagree with his arguments, makes his arguments much better and cohesively than Hassett does.
Hassett's got this Pillsbury Doughboy energy.
Isn't he a little too ugly to be a Trump nominee?
No, there's plenty of ugly Trump nominees. The ugly is only a problem if you're in trouble for something else.
If you get him in there, I expect you're going to get the rate cuts you want. They're going to cut the federal funds rate, right? And there's a lot more that the Fed chairman can do beyond just wrangling votes to get interest rates one way or another. There's a whole research arm that'll have purview over. There's other non-interest rate operations like buying mortgages that the Fed can engage in to either create or reduce financial repression, things like that. But I don't know. This guy at the bully pulpit of the Fed, I don't know. I mean, it could be, Kobe, it could be an Arthur Burns scenario. Who knows? You know, he could be appointing Arthur Burns 2.0.
And who is that?
Oh, Arthur Burns was the Fed chairman under Richard Nixon, who oversaw inflation for the entire decade of the 70s. That was like 7-8% on average per year. And who came in and cleaned up his mess was Volcker. But remember, to clean up that mess caused a recession, high unemployment. This Fed is not willing to do it. They're not willing to eat the unemployment in order to kill the inflation. If they were to do that and raise the rates high, you might not even get the desired outcome you want. You might not even actually get the inflation down the way you thought you might because of the demographics of the current American labor force, coupled with the immigration rhetoric or actions, coupled with the tariff rhetoric or actions.
If only somebody had figured out how to get inflation down without causing a recession, without increasing unemployment.
There wasn't a recession. The most you got was a bear market in the stock market in 2022. And that was really the soft landing you're referring to. People didn't lose their jobs. Unemployment wasn't jumping. They raised rates. Inflation started coming down. And the sacrifice we made for it was the companies that made pictures of rainbows coming out of your mouth took a hit for a year.
If anybody on the Nobel Prize committee is one of our 100 listeners, you have an opportunity to do the funniest thing ever. Give Biden and Powell the Nobel Prize for economics.
A co-Nobel for economics? Wow. When was the last one? I don't even know. We spent too much time on this already.
I don't. Was Nash? Did Nash get an economics Nobel degree?
I think for the Nash equilibria.
Okay.
If you want to learn something, Google the Nash equilibria. And then you know how Nash died? One of the smartest guys in the room wasn't wearing a seatbelt in the back of a taxi.
Really?
Yeah, go look it up. He was like 85 years old. And that's how he went out.
Folks are freaking out about Japanese bonds. I'm going to be honest with you. I don't understand any of this.
Japan's the largest holder of U.S. government debt. That's what you got to know.
And the fact that their yields are going up means what?
Their currency is weakened substantially against the U.S. dollar. They have somewhat of an inflation issue right now. They also are not incredibly receptive to immigration. They have a demographic problem. They have an opposite housing problem where in some areas of Japan, they have more housing than they know what to do with. And maybe you've seen on Instagram, oh, hey, come buy this house in rural Japan for $6,000. Well, that's why. For listeners, you just need to know that the largest holder of U.S. government debt is having substantial economic problems of its own. Am I worried about it? I don't know. Not yet. When I went to Japan, this is several years ago. This is like 2018. The Japanese yen was like 105 to 1 U.S. dollar. The Japanese yen is currently 150 plus to 1 U.S. dollar. So the Japanese yen has devalued some 50% in 7-8 years against the dollar. Not a good thing if you're Japanese.
And a bad thing for us, because if they go belly up, that's one of
Who's buying the debt? If you sell a product and one customer makes up 15% of your sales and they're the biggest customer you have, if they sneeze, that's not a good thing for you. That's an emerging risk, by the way, for this administration. And they got that new prime minister coming in who he just had to tell, hey, be quiet about Taiwan. I'm trying to make nice with Comrade G.
Michael Burry, the legendary investor who was played by Batman in The Big Short.
Christian Bale. Yes. Method actor. Excellent. Just for those who didn't know which Batman.
That's right. Michael Burry, the legendary investor played by Alan West.
No, who was the guy that was Birdman that also played Batman? Michael Keaton.
Michael Burry made a big, spectacular trade that a lot of folks said was investing against AI. I tried to look into this. It seemed to me that his main quibble was about accounting
depreciation
and chips. And it seemed to me like he identified a pretty smart little weakness that he could trade on. But this didn't seem to me to be the doom and gloom scenario that some of the headlines were hoping it would be. Do I have that right?
Yes. And that's why we have markets. There's disagreement. How long are these chips going to be valuable for? These GPUs or TPUs? How long? 10 years, 5 years, 2 years? People have differing opinions. That's what's beautiful about a market.
But this isn't some harbinger of the recession that everybody...
No, I don't think so. And he just closed his fund. And he probably closed his fund because it wasn't doing so well. It's my guess. I'm speculating a little bit, but...
He's gotten some big trades wrong since The Big Short, hasn't he?
Yes. Everyone's always chasing their last dragon, Kobe. I don't know why people just can't go and fuck off to a private island like a normal person. But hey.
The last headline I wanted to ask you about was the big Bitcoin decline. All the crypto bros are not having a great time right now. And it's kind of weird seeing as there's so much confidence in the overall cryptocurrency market because of all the friendly regulation from the Trump administration. And even some bigger financial players like Vanguard and others are starting to incorporate crypto into their larger holdings, wanting everybody to have 1% to 4% in crypto just to mitigate their risk. I know you're not a big crypto guy, but are you following this stuff? And
sure.
Are you bullish or bearish on crypto right now?
Oh my gosh. Am I bullish or bearish? I couldn't tell you. Look, Bitcoin's been around for what, 15 years? We still haven't found a really demonstrable use case for it. When is that going to happen? We're waiting.
Yeah, you and I are both in agreement on that one.
Look, I think
we're also in agreement on the fact that anybody who is big on Bitcoin is anti-American dollar.
Yeah, why would you talk against your own currency? You're supposed to make dollars and invest elsewhere, right? That's what I told you about the penny. For crypto, as far as Bitcoin goes, you had a double whammy situation. The first whammy was Trump gets elected. Very pro-crypto, right? Then you got the Genius Act, the stablecoin bill, which was supposed to be very pro-crypto. But people who I had talked to in the financial services industry said, hey, these Genius Act, which regulates the stable coins, which basically invest in US treasuries and you don't get the benefit from the interest, your issuer does, it's actually might not be good for crypto at all. And I said, oh, that's interesting, but the market's trading otherwise. Lo and behold, it's basically been a straight line down from there. It's a risk asset, man. It basically tracks the NASDAQ 100. It's almost a levered play to tech companies.
Yeah, I think stable coins sort of undermine the entire already questionable argument for cryptocurrency. But
look, even if instant settlement is very important to you, right, where you need to settle a transaction instantly in a snap of a finger, and you can't wait 3 days or 5 days for your transaction to settle, that's a very small demographic of transactions. Even if it's very big transactions, the scope of that market is small. And at what cost? If you have tens of millions of dollars going into a stable coin to transact, how's it getting there? How much time did it take to get it there? And then you're instantly transacting. Okay, fine. But if I have it there for any material period of time, even if it's a week or something like that, and it's tens of millions of dollars, I could be foregoing a significant amount of interest on that, especially at current market rates. So I don't know, man. To me, it's just simply a risk asset. You want to take risk, you buy it. You're scared to take risk, you sell it.
If the entire point is that this is a currency without a government, and stable coins are just a way of attaching the currency to the stability of governments.
It was just another way for people to make a buck.
We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time